Hi, Stephen Ranzini. I am president of University Bank. For those of you who don't know, University Bank is a local community bank. We manage $13 billion of customer assets. We happen to be the fourth highest rated bank in the state of Michigan per the IDC rating agency with a nearly perfect 292 out of 300 score. And I've given you all a little handout. I just wanted to quickly run through a couple of pages of that. If you look to page 4 of the handout, it has a long-term chart of the 10-year cyclically adjusted PE ratio, which currently is about 50% above fair value. This is one of the most reliable indicators of relative value of stocks, and statistically, historically, if you have bought when it's at fair value, you get about a 4.6% return over the last 110 years. And if you buy above fair value, obviously you suffer poor investment results. And if you buy below fair value, you have had excellent investment results. Page 5 is the Tobin-Q ratio. Professor Tobin won the Nobel Prize. I knew him while I was getting my degree at Yale. The median line there, again, we're well above the median line. If you look to page 6, you can see we're about 45% above the median line currently. The Tobin-Q ratio is a different method, which is very reliable to indicate statistically whether or not now is a good time to be buying stocks or not. The Q ratio is comprised of S&P 500's replacement value. So if you had to go out and just completely replicate all the assets of the companies in the Standard & Poor's 500, and then they take that number and divide it into the current share price of those companies on the stock exchange. And currently, those stocks are trading 45% above the replacement cost, or Tobin-Q ratio. Again, a real indication of overvaluation. My experience with pension funds is pretty extensive. Actually managed one starting when I was 21, right out of college, two $40 million pension funds. And when we bought the bank in 1988, when I was 23, it had a pension fund. I actually did an actuarial evaluation of that and concluded it was overvalued, overfunded, bought an annuity from a AAA Canadian life insurance company, and defeased it, and took the cash and put it into an employee stock ownership plan for the employees of the bank's benefit. If you look at page 8, it has a little bit different chart which shows the Q ratio not on a straight line but relative to actual share prices. Right? So you can see there's been times in the recent past and both of severe overvaluation and undervaluation. Page 9 is the chart of the last 115 years of 10-year Treasury bonds. And before the chart starts, I would just tell you that rates were higher. So the all-time record low rate in the United States actually occurred in July of 2012, 1.394%, which is actually lower than the rate in the Great Depression. In the middle of the Great Depression, rates never really got much under 2% for more than a few weeks. The indications that I'm giving you are really important to consider and are profound because, if you buy when the market is high, you will have poor performance over the following 10-year period. And pension funds really need to look at that kind of thing. I'll give you some advice from one of my heroes, Warren Buffett, the most successful investor of our time. He says investing in the stock market is very much like having a business partner who owns 50% of your business, who unfortunately is manic depressive. And the key to being really good at the stock market is knowing what your partner's mood is that day, right? So some days you go into work and your partner's just all depressed. He's been off his pills. And, he's like, oh my God, the business is terrible. Just buy my business, just name your price. I'll take it, right? And other days he comes in and he's very high on everything, on life and the business. And he says, boy, the business is so great. Just name your price. I'll pay. I got my checkbook right here, right? So the key to being successful in the stock market is knowing what Mr. Market's mood is, selling him your business when he's manic, and buying it from him when he's depressed. Thank you very much.